Guys, welcome back. In today's video, we are talking about AMC growing in volume, the real AMC shares, how shorts are underwater, and many more in this video. First, we're taking a look at this. Breaking, AMC appears to be growing in volume. We also have a bullish RSI divergence on 435 long-term support. So technical analysis is something we cover on this channel, but the ones that I want to talk about here is understanding the volume area, because volume indicates and showcases a lot more things to us. Some of the things that we've talked about is obviously with the accumulation of AMC. Now, the accumulation is very important because it allows us to understand if people are buying into AMC or if people are selling into AMC. And obviously in this case, as we are seeing volume to grow, as we're seeing accumulation to also go up, it means that more and more people are buying into AMC. And that itself is a good thing. Because when we take a look at the chart, first we have to understand that this is of course not real price discovery. We do not have a true reflection of what the value should be for AMC. And even in days where we're seeing more buys than sells, you will still see the price go down. And again, the OBV is a very clear indicator of that. But it's important to understand is that people are buying and holding on to the AMC shares, because that allows us to understand is that people have not left AMC. In fact, more and more people are coming into AMC, and that makes us understand, what we're looking out for the future, what the investor sentiment is, and again, allows us to understand what we should be looking out for the future. And so when you take a look at this, wherever it's the technical analysis, wherever it is the volume, and again, I'm highlighting the volume here, it's obviously showing the bullish sentiment for AMC. And you can also see this weekly moving average are so high, need to break 473 to regain the same setup. And again, we're talking about the technical analysis. Like I said, this is something that we sometimes look at on this channel, and you can even see it here. But what we have to understand is that right now the bullish sentiment is extremely good for AMC, especially after all these negative articles that we're seeing. Like I said, the media doesn't actually dictate what's happening for AMC. It can portray a narrative as they try and make it out to be, but the real importance of understanding whether or not people are selling their AMC shares is through volume, it's through OBV, it's through other indicators that allows us to understand, are people actually buying or are people actually selling? Now, also you can see here, make sure your order type select as market when you buy AMC, knowing as slap down ask. So your order hits the lit market. Do not set a limit when you buy. Now, the reason why I'm bringing this up is in terms of understanding, and again, it's going back to why we're not seeing real price discovery. One of the biggest things everyone should understand is that along with the countless methods they use to suppress AMC, like we talked about, synthetic spoofing, another thing they do is obviously with the dark pool, is with routing your orders into dark pools, therefore it doesn't hit lit exchange. And what that does is the buy pressure that you're supposed to obviously have on the market, because it's not in the lit market, because it's rooted into the dark pool, it therefore doesn't have that effect. And so as normally when if you buy X amount of shares, it should bring the price up, because it's not actually hitting the lit market, it actually has no effect. And what does hit the lit market is obviously the sell orders, is obviously the short orders, and therefore that has a negative effect on the price. And the big reason of understanding this, and you can easily see here, Brett Harrison, former head of FTX US, has made a long throw regarding FTX US and his time there. In December, Unusual spoke to SBF when he said tokenized shares of AMC GME were backed 1-to-1. And this is what we talked about in terms of why it's important to have your orders hit the lit exchange, because it is masked behind all these billions of tokens that were created, which were backed 1-to-1 for AMC, which were backed 1-to-1 to GME. And again, this showcases what we were talking at the very start of the video in terms of understanding, is it price dropping because of people selling, or is it because of the methods that they are using? And so it's very important to understand that, and that's why we said volume is a very clear and strong indicator that we need to utilize to understand whether or not is actually people selling, or is it the institutions that's manipulating and suppressing the market. Now, to understand right now another situation for the short sellers, because we know that they've created the billions of synthetics, we know that they are trying to obviously hide the buy orders for AMC. Something else that's happening is obviously this. So what you can see is in the past, when GME makes these technical advancements, you can see it having very strong momentum, and you can see it having a very good breakout. And that's what we're seeing for GME right now as well. We're essentially seeing how history is repeating itself. But it's more important to understand where we are at with the price of GME, because firstly you have to understand that, again, the technical analysis, the technical factors is that when we do break certain areas, the price will break out. And what is the reasoning behind this? Is it just the random targets that we are giving, that we are seeing? No, that is not the case. What we have to understand is that there are large positions of short orders all accumulated in different areas, in different levels of GME price. And you can see all of these short sales are on the water now. So as you see, all these short sales that were made within, of course, these price levels are, of course, all taking a loss right now. And that's very important, because what we know and what we've seen in the past, and even with AMC as well, was that there were a huge amount of short orders around the $6 area. And you can even see it in terms of why every time AMC kind of closes in towards, and you can see the high of 556 we saw recently, when we're closing towards that $6 area, why is the price being suppressed? Well, that's because of what we talked about here. There are large concentrations of short orders being placed at certain areas, and that's what they are afraid of. And that's why when AMC break above certain levels, you can see how a breakout is imminent, because when it is going above those levels, we're seeing those large short positions start to be in a loss. We can see the previous set of orders to be in a even heavier loss, and that will obviously lead to the covering of their short positions, wherever it's the previous short positions so that they want to cut their loss, wherever it is their existing short positions because they understand that if the price was to go higher, they will take an even bigger loss, or wherever it's to try and take away their future short positions. You know, these are all things that allows us to understand why the price is breaking out. And that's why we see, whether it's with the technical analysis, whether it's with the sentiment analysis of AMC GME, in terms of understanding where short orders are heavily concentrated and why prices will break out when it goes above those areas. And you can also see another reason for why we understand this, the GME total return swaps, and you can see 6/1 2021, $5 for 5 shares, strike matches high. And what we're seeing is rehypothecated GME swaps by using block trades, by block trading them into dark pools. And this is what we are seeing. Now, the total return swaps is something that we've talked about heavily in the past. We know that there are toxic swaps derivatives that we've mentioned in the past, the very ones that, you know, broke Archegos, the very ones that broke Credit Suisse, and the very ones that are breaking UBS right now. And they don't just exist for GME, but AMC as well. And we know that what we understand so far as in terms of how deadly these swaps are, it's only a fraction of what it actually is. The very fact is bankrupt Archegos, which then bankrupted Credit Suisse, which is now likely to be bankrupting UBS. You know, this is something that we, from data, know it's something that's extremely big, but we don't know to the true extent of how deadly it is. You can see how UBS needed help. You can see how the reverse repo was used to help Credit Suisse. You can see how UBS is relying on government aid and others as well to try and protect themselves from these positions. So we know with these swap positions, especially these toxic swap positions, you know, where they stand in this whole situation, and how when they blow up, it will obviously blow up all these institutions, whether it's the short sellers, whether it's the banks who have took the wrong side on AMC and GME. Now, you can also see they're literally running out of leverage to keep this melt up funded. And now what we're seeing is, in terms of, again, this is talking about the overall market now, because one of the things we talked about is we are seeing the whole market going up. That isn't something that, you know, we are oblivious to. Now, with the market going up, what that does is the collateral value of these hedge funds, of these institutions, are also going up because the asset value has gone up. But what we have to differentiate between, is this a healthy moving up in the market or is this an unhealthy move in the market, is that these are done with over leveraged positions. This is what we obviously talk about in the past as a bubble, as a balloon that could pop at any time. So yes, the collateral value is going up, but the value that they are resting their collaterals in are in extremely risky positions where if they're not handled correctly and well and they blow up, it instantly wipes out trillions and trillions of dollars. And that's when all their collateral value go to zero. So yes, they're able to get money, they're able to get loans, they're able to put their collaterals up because the whole market's going up. And therefore they have the capital to manipulate and suppress AMC. But the moment you see the whole market go down, which again it will because of how over leveraged these positions are, and they eventually will run out of money, they will run out of leverage, they will run out of the liquidity and capital to continuously holding this facade, then that's when we'll see all these short positions having to cover as their collateral fails. You can also see cash yield now more than the S&P 500. This has occurred 8 times since 1963. Each time it happened near a market top. And so again, we're seeing multiple signs of why the market could be collapsing, why the market could be falling. And just like what we talked about earlier, if the market were to fall, so will the positions of these institutions. And you guys, thanks for watching. I'll catch you guys next time.